Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Thursday, May 22nd. A lot going on in today's markets. Before we get into what's crossed our radar, I do want to remind you, if you've not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com. From there, you can select the markets that most interest you and get that emailed out to you each and every morning. And throughout the trading day, we update our portal with a lot of information on a live feed, so you can get signed up for that as well. And if you have any questions over the markets or just want to talk strategy or what services that we offer here, don't hesitate to reach out. We are ready, willing, and able to help. Now that we got that plug out of the way, we can kind of pick up where we left off yesterday. Yesterday we had Dan White, head of research, kind of talk about the crude oil market, rejecting higher prices on the back of some headline news that gyrated things. And we saw some follow-through selling pressure in the overnight early morning trade, which took us back near 60, but the market was able to defend that, and we're back kind of near unchanged as we enter into the back half of the afternoon trade. So not a whole lot to report on in the oil market, as we're still kind of in the middle of no man's land when you're looking at a chart. Silver was the big mover in the overnight trade, and yesterday we talked about silver coming to the altar. Are we going to break out, or are we going to fail and break down? Unfortunately, silver was left at the altar. The bride never showed up, and we saw heavy selling pressure overnight, really on the back of the tax bill passing through the House, which put a dent on potential demand from the solar energy. So basically a wind down of the tax credits for those solar companies. So if you look at the solar companies, there's a wide variety of them, but they're trading down 15 to 40% lower in today's trade. Now that tax bill does move on to the Senate, so there is potential for things to change, something to keep an eye on. But regardless of the rejection for silver, battled back really, really well through the 7:30 open session and into the afternoon, and about halved their losses, maybe a little bit more. So we're trading off of those lows, which I think is encouraging, rather than the opposite, seeing that pressure accelerate on that 7:30 open. So silver linings, maybe I'm grasping there, but I thought it was encouraging nonetheless. Now, there are a few other things that we want to touch on in the softs and agricultural space, as well as the equities. Before we get into that, I'm going to hand it over to our technical analyst, Matty Candlesticks, and he's going to tell us what he's been looking at here through this afternoon's trade. Matty, take it over.
Thanks, Oliver. This is Matt Bresnan, market strategist with Blue Line. In today's chart, we are looking at an hourly chart of the June dollar index contract, and it does provide us with a really awesome example of a signal line cross on a MACD. So we're looking back on May 20th here. We're seeing price trend lower and lower, and our first caution flag, this is your canary in the coal mine if you are riding a short position through here, is that your signal line starts trending higher. And the trending higher, that provides the warning that the trend may be slowing down or changing, but it doesn't finalize the cross until over here on May 21st at 10 p.m., where price actually bottomed and then ultimately trended higher. So when you're looking for a signal line cross, what you're ultimately looking for is when the signal line breaks above the MACD line. That would be your action signal. Thanks, Oliver. Kicking it back to you.
All right. Thank you for that, Matty Candlesticks. The U.S. dollar currencies have caught a lot of attention here over the last several months, really since the start of the year. There's been some big fluctuations there. And one of the lessons I first learned when coming into the industry, and sometimes it works and sometimes it doesn't, like a lot of things in trading. But you get the dollar right, you get a lot of things right, because a lot of these commodities in the U.S. price in U.S. dollars. So that's going to be important to keep an eye on here in the near term and beyond. Now, winners and losers, let's talk about those for today. Winners and losers, both of them, got to go over to the softs market. The big winner today, OJ, up 5.5%. A lot of that strength coming on a technical double bottom against the April lows that we saw last week. So some impressive price action in OJ. Resistance, 320. That's going to be the line in the sand to keep an eye on. Consecutive closes out above there, and the market technically has some room to run to the upside on that front. Biggest loser of the day, Going over to cocoa, despite my craving and influence on demand there, down 4% on the day. A lot of that was largely on profit taking after the recent run higher that we've seen really over the last month and really last week, 16% higher just last week. So a lot of that, I think, is just long liquidation on the back of a good run. So soft markets on the move again in today's trade. And wrapping things up, we'll kind of look at some of the grain markets, livestock markets, and then equities. Grains, relatively quiet. We did see a gap lower in soybeans last night as more biofuel headlines kind of hit the tape in the middle of the intermission. So 7 p.m. we gapped lower, but unlike last week, soybeans were able to battle back in the same day and finish in positive territory, and I find that really encouraging, as well as some of the action we saw in corn. Posting some strong momentum to the upside again as well. Now, I take that with a grain of salt. We do have a 3-day weekend ahead of us, and weather is so important this time of year and can change so quickly. Ahead of a 3-day weekend, if you've been long these grain markets, I think it's prudent to either reduce or manage that risk ahead of time so we don't get a gap against you come Monday night. Now, on the cattle side of things, big surge higher. Cash cattle continues to be very, very strong. Ahead of the cattle on feed report tomorrow afternoon, traders kind of waiting to see what the USDA has to say on that end. Going back to the 3-day weekend, as mentioned with the grain markets, will the market remember that we had a cattle on feed report tomorrow when we come back and trade on Tuesday? To be determined. I think it would have to be a meaningful surprise in either direction for the market to have a big reaction to the cattle on feed report. Fundamental backdrop still firm for now. Historically, looking at the 5-year average of box beef, you see this time of year start to top out. So if that plays out this year, potentially that becomes a headwind. But all in all, cash market's still firm. Last not least, equity markets grinding higher today after a late day sell-off yesterday. If you kind of zoom in though and look at a 4-hour chart, it's starting to look a little bit tired, and you're starting to see things round out a little bit. Not to say that we're going to crater and see sharp selling pressure into the long weekend, but be cognizant of some of that tired feeling and potential exhaustion after the big run higher that we saw really to start the month of May. So that's what we're looking at. If you have any questions at all, don't hesitate to reach out. We're ready, willing, and able to help. If we don't hear from you, we hope you have a great and safe long weekend. Rest up, and remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.